Hello there. Hello there, traders. Welcome to TOGS Trading Podcast number 33. TOGS Trading Podcast is all about myself and Big Ian in Dublin, where we're basically just sharing the reality of your journey as a trader rather than some of the nonsense that we see on social media. I'm sure you've seen plenty of that. But anyway, today we're up to, as I said, TOGS 33. And as we said last week, this week is all going to be about should we be back testing, right? What are the pros and cons of back testing? So undoubtedly, you'll have your own ideas and thoughts, okay? And that's absolutely fine. Please put them in the comments section. And we really appreciate seeing people's mails and comments, etc. It's really all great feedback. We all really enjoy it. So please feel free to wade in with your own opinions and comments. The good, the bad, and the ugly of it, that's absolutely fine. So, as always, I'm joined by Ian in Dublin there. So, looking good. Billy, Ray, how are you doing?
Very much. I'm all right. Slight head cold. That's about it. About the excitement of my life at the moment. Other than that, starting to get ready for Christmas, which means I have to go for a haircut soon because it's not a good time of year for me with the white hair and the white beard. It's a pain in the neck, actually.
Yeah, I thought you'd get loads of extra side hustle jobs as a proxy Santi.
I have actually been offered to work as a Santi for €15 an hour if I wanted to, and I went for coffee. It was about 2 years ago in a place beside us in one of these urban farms, and the manager came up and said, "Have that coffee for free," and then it turned out he wanted me to work as Santa for €15 an hour. I didn't
living the dream.
Yes, I do have my own Santa suit now. In all fairness,
listen, what you get up to at the weekends, none of my business. Ian, what you and Mrs. McFadden do is, none of our business and stuff.
I have. Well, actually, I have to admit, I did Google Santa fetish once just to see if there was something out there, but there isn't. It doesn't exist, and I was very sad, to find that out. That my specific visage is not a special interest of any group.
All your hopes and dreams shot down in one Google search.
But it's terrible at night sometimes. From about this time of year, anyway, it's because when you're leaving the pub, you just head down and walk home because there's always somebody's going to go, "Oh, Santa, how are you?" And they all think it's the first. They all think it's the. Well, I live in Dublin, so that they all think it's the first. They're the first person to ever, come up with this fantastic idea. So I've been in loads of hen party photographs and stag party photographs. Like you get grabbed by gangs of people as you're walking through town sometimes. For
all right. Well, there you go. I thought they just grabbed you because of the TOGS Trading Podcast. That there are just so many people in Dublin listening to it.
This would have been before their time, I think. And and I've sat in. Well, I remember being in Kyo's actually upstairs in Kyo's one night, not so long ago with my wife, and some random woman came over and sat on my knee and dribbled in my ear for.
And it wasn't your wife.
That wasn't my wife, no.
Oh right, crikey.
So it's.
Well, there you go. Strange things happen upstairs in Kyo's.
They do.
Well, we'll just draw a discreet veil over our social evenings and events and stuff. Yeah. We'll save that for our Dublin social. All right, next year. Okay, yeah. I will this week. I will get on with putting some dates in the diary for that and stuff. So people can get out from behind their screens or get out from listening to the pod and actually come and just join us for a pint and a chat with traders and stuff and what have you. So I'll do that. That reminds me to do that. But so of course this week is a bit of a strange week anyway, because of course it's the American Thanksgiving, and we're in a kind of a bit of a strange period. So where it is Thanksgiving, so it's a kind of a shortened week, but also we have got the shenanigans of Trump's political picks having impacts on markets, and that's what we've seen this week, and it's been fascinating for me. Okay, on the kind of intraday FX side, about how you don't really get gaps that much in the FX world these days. Not like you used to, but Sunday night there was big gaps in the FX world due to Trump's pick, Treasury Secretary Bessent, and then basically the next night, he comes out and makes all these claims about tariffs against Canada and Mexico and China, and that basically gaps the dollar and stuff, and had an impact on those FX pies. So it's a bit of a strange week, to be trading as well. Okay, and today is a busy day. We're recording this on Wednesday, so there's lots of news coming out. And so it's on strange weeks like this that maybe that might be the kind of the topic of focus turns towards, well, maybe I should be doing some back testing. So what do you make of back testing, Ian? What are your own thoughts about it all?
Well, it's a necessary evil, really, to be quite honest with you. I mean, it's something you have to do. It's something you have to. It has its limits, of course. I think it's you end up having a process for it because, and also as well, when you get to a stage when you're a professional trader, you're not, you are back testing all the time because the markets change as well on top of everything else. And you have new ideas from time to time, but generally they're not massively new ideas because you specialize in a particular type of trading. Like I'm a Fibonacci trader, so there's only a certain amount of back testing I can do with that. Most of my back testing now would be making changes to specific parts of my setups. So you might find there's a better way to enter, or there's a better anchor to use, or something like that with your fib draws. Little things like that, and that's what you're back testing. And I was doing it recently. Actually, I had a brainwave one of the days for something I saw in the market that I thought was really just something I saw off an indicator, which I was looking at, and I was kind of going, oh, that's really good. I'll back test that, and it was a disaster. It just didn't work.
Yeah,
I had, and that's one of the first problems with back testing is that when you're doing back testing like that, if you're just chart back testing, you can be a bit prejudiced in your back test, and you end up trying to get the result that you want, not the result that's actually there. So I looked at something that I thought was actually happening, and this is only about 2 weeks ago, I think 3 weeks ago. I was looking at something that I thought was actually happening in the market, and then when I actually went to back test it, it wasn't happening at all. So it obviously, in some level, was trying to look for a result that I had seen something happen, made a link in my subconscious to it, and then went to back test it. And when I back tested it, the back test lasted an hour.
yeah,
because it just didn't work at all, unfortunately.
yeah. But that's an important. I think that's an important element of it is that you need to test it, okay, and maybe later on we'll talk about the difference between back testing and forward testing. But you do need to test your ideas, okay. Even I think didn't even Livermore say in his book about if he got given a trade signal or trade idea, he would still go out and test it beforehand. All right, yeah. You have to test it, and as you say. And we all have our biases, prejudices, a bit of optimism bias. You all have optimism bias. So you pick up on something and you think, oh, this is happening, but you actually have to go out and just test it and just get it clarity in your own mind, don't you? You really do have to go with it.
Yeah, and then you need to have a formal process for doing it as well, I think. So
Yeah.
my process, if I was testing something like a moving average cross, which is something that's happened, I start off by going back over closed charts and looking to see how many times you had on the time frame that you wanted, how many times you'd seen them, and how many times they'd be successful, and a basic idea what they yielded, and so on and so forth. And then I would do it. The next thing would do it on a simulator. Depending if it's a span U idea. If it's not a span U idea, I'd just go live with it quite quickly. But I'd do it on a simulator if I had time, because it's just a cheap way. You're hopefully going to put less of yourself, because you're just doing something on a simulator. It's not going to cost you money. So you're going to hopefully put less emotion. You're less likely to make mistakes in that type of environment. And then I like testing stuff on spread betting, because spread betting is crap a lot of the time. It's, the spreads are broad, the pricing is terrible. So if my idea will work on a minimum amount of a spread betting account, like if you're trading, I think, what is it in IG, it's €1.23 or something like that is the minimum you can do anything with the ES. So I do it at that level to see, first of all, because it's really good to go live even at that level, because you can't have a bias. Your account is either going up and the idea is working, or your account is going down and the idea is not working, and you can't lie to yourself, And then it's pretty much, take it live after that, and see. And then with some record keeping, you have a good idea. But one of the things I thought when I was writing that out, like that when I see with a lot of other people, when they're starting off and they're doing back testing first, they're looking at something happening on a chart. Say, again, a moving average cross. And they count all the moving average crosses, and they want this clear, I think it's because they have an image of what professional trading actually looks like. They want this clear thing. If I do this 7 times, or say if I do this 10 times, it will work 7 times to this level. And there's very little that really happens in the market as such, because what backtesting often does, and what newer people when they're doing backtesting, is they completely forget context.
Yep.
And nothing happens outside of a context. So if you have some random cross, if you have price coming all the way down to significant support, and you have some random cross, 5 points above your support level, that is not the same as a cross if it's inside your level. Not that I use moving average crosses anyway. One of the other things I saw with them, which is one of the biggest problems I always had with backtesting things like that, is that if you start off and you're looking at closed charts have no false signals because they're closed. So when you go back and you have whatever it is, again, we said moving average crosses, a moving average cross will happen on a chart and then it will uncross itself. And then you have seen the signal. You might have acted on the signal. We say if you're honest, but when you're looking at a closed chart, all of the crosses are closed. There's no falseness in a closed chart.
Yes.
You can see what's happening. So that doesn't actually that's one of the drawbacks I think of that. One of the things that happens in backtesting a lot is that if you start off and you're looking at a closed chart, it looks often better than it is, I think.
Yeah, no, I'd agree with you on that. I've always said that backtesting is important, but ultimately it is there just to really give you an idea. Can this dog hunt? As in, does this setup, this tactic, have enough merit to basically start to forward test it? And as you said right at the start there, a lot of the times it doesn't. You test ideas and it doesn't work. And you know what? That's fine. That's absolutely fine. Absolutely fine. Most of the ideas you test are probably going to fail. And that's absolutely fine. It's better that you do that than basically find out the hardware, which is the way most people do, which is to put full size position on, thinking they've had some sort of eureka moment and that they've tapped into a way to turn their laptop into an ATM machine and stuff. Because actually, what we're looking for is this is an opportunity to do some risk-free evaluation. All right, the opportunity to do it now. I still primarily do any back testing by hand, as in I will literally, at a weekend or off market time, sit and just go back through the charts and just slowly but surely just literally go back bar by bar by bar. One of my old partners, said, she would leave the house, on a Saturday and come back 6 hours later, and I'd still be in front of the charts, just literally back testing ideas, just bar by bar by bar. And I quite enjoyed it, etc. But it was off market, so your opportunity for those, let's say those false signals when you're trading trying to do it at the right hand edge of the screen in a live market, you can just work your way through it. And as I said, you're just trying to give yourself an idea. Can this dog hunt? Now, I appreciate that we've come on in terms of technology that is available and solutions. And of course, now you have the ability, if you have the ability to code up, you have the ability to do, huge amounts of testing, back testing. But, it is not the panacea. I don't think it's the panacea people think it is. All right. I don't think it is, for some of the reasons you've talked about and stuff, in terms of, every signal is a right signal in terms of there's no false signals. You don't know, how good the data is. All right. In terms of, most retail traders, you're taking the data from, MetaTrader or TradingView, whatever. Okay, you don't actually have any idea about the quality of the data itself and stuff. So you have to think: is the decision making being made, on good data, or is it on sloppy data? Now, you're a retail trader. The reality is you've got to work with what you've got to hand. All right, the likelihood is you're not paying top dollar for fantastic data from an exchange or from a like a tier one type free feed and stuff. So you've got to work with what you've got, but you do have to take that on board, don't you?
Yeah, you do. Also, the other problem with that is it doesn't take into account your emotions. And
Yeah,
the thing is, what I find with an awful lot of things, like if I sat out there and take double bottoms, for instance, like double bottoms are fantastic. I think they're probably for me, they're the premier of all of the day trading setups. But a significant double bottom does not necessarily, you're not going to get one every day.
no,
You're not going to get them with huge frequency, or double tops with huge frequency in a way that well, 60-minute ones anyway. I mean, you're going to get 5-minute ones and stuff like that, but you're not going to get 60-minute ones. So there's a setup that basically is a good start, but it's too slow, so it doesn't take into your need to be whatever. I was going to say entertained, but that's obviously kind of completely the wrong word. Like, but so you need to trade at the speed that you need to trade at.
yeah. And it's also, and that kind of links into it. It's just on that double bottom. A double bottom is not a mechanical setup. So even if you would try to code that, I think you'd find it hard to. You wouldn't code with the ability to understand the context and nuance that you can see when you're seeing a double top or double bottom or any chart pattern unfold in front of you.
No, I don't think it could. And I don't think, the old Bulkowski thing with all the book, the big thick book with which I have it upstairs, actually, all the patterns in it. And I think a lot of that has to be gone, because everybody has that same testing software. They've made it quicker and faster. And I was out the last day, I was out at the Institute or whatever, the Society of Technical Analysts, and I was looking at a guy building software, and it all makes everything quicker and faster and everything like that. But that means everybody has it because everybody has a certain level of. So, it's that again is going to make a lot of the ideas that you come up with obsolete before you start, because you have bigger funds that can actually affect the market, with better software than you were hunting for exactly the same anomalies. And I think a lot of those things worked when you rang your stockbroker about going into something, and then your stockbroker, and then the fees were enormous, so people couldn't get in and out. So I think a lot of that, as easily where the course you can get in and out now for pennies, really, well, dollars, a couple of dollars. So I think that killed off an awful lot of that. So I think it's a huge big thing anyway that it doesn't. 20%. I was thinking about it during the week, and I would guesstimate about 20% of my trades suffer in some way from me making a mistake in some way or other. So, it's so that's an emotional thing. That's something where, like yesterday, like for the last few days, previously, flying, having the best time in trading, loads of volatility, still technical. It was fun, just fun. And then yesterday I was a bit tired. Actually, when I was looking at it, I was doing my review yesterday. One of the things that happened yesterday was that I went out and I just after getting home, and I bought myself my Christmas present. And I was a little bit excited and thinking about my Christmas present, and I was quite happy when I was sitting up at the thing, and it started, and I fat fingered, did a fat finger, and I lost 4 points on a full bag, basically. And that threw me off. And the next 3 trades were just all losers. And emotion took over, and I basically eventually got 4 points back I was down 9. I eventually got 4 points back, and then just closed down for the day because 50% of your edge, at least 50% of your edge, is just your mental setup at the end, like how you're functioning yourself. Because if you're afraid, you can't make good choices. And every time, you want to be trading only at the good times, and every time that you're afraid or there's something else going on emotionally for you, it's never a good time. Doing anything that's frightened is not a good time, except maybe going to a horror film or something. I don't know, but but that was basically it. But the few days around were just really lovely. Like, I really enjoyed it.
It is. It is one of those issues of, and I've seen it on trading floors myself. I've seen it with my own eyes of people start to code up a setup, and they basically then they back test it automatically rather than hand by hand like old duffers like us might do. Is they'll actually switch it over to the algos and stuff, or switch off to the coding and let that do it. But then what happens is there's kind of a couple of things that happen. One, either they get into kind of a mindset of just constantly over optimizing the strategy and just tinkering with it, think, oh, I can just make it a bit better. I can just make it a bit better. Just make it a bit better. Just make it a bit better. And actually, then by the time they realize they've spent all this time, it doesn't really get that much better. And then actually, when they put it into the live market, it never trades as well as their over optimized, curve fitted setup that they have basically worked on through their own particular back testing. Or a variation of that is that basically, what works well in a, let's say, in a coded back testing environment, they can't execute it, or they can't execute it with any consistency in a live market, because either it is just too complicated, or there's just too many variables attached to it, or rather it's just they haven't taken into account let's say the kind of the vagaries of a retail market, i.e., trying to trade after a news event and the spreads are 3 times what they normally are and stuff, which basically isn't, when they're back testing it, or through the curve fitting and stuff, it doesn't show up in any ways and stuff. So it makes it sound like we're absolutely hammering back testing, and we're not. It has to be done. It's, as you said right at the start, it is a necessary evil, and it does have to be done, because there are things like giving you an idea of historical insights. There are ideas like giving you an idea of some of the metrics, okay, and whether, as I said, whether the dog does hunt. But also, it will give you confidence, and belief that actually, do you know what? I've got this idea. I've back tested it. It seems to have, some value to it. You've got confidence in it, which means you are more likely to be confident in when you come to employ it in live markets. And as you said there, the mistakes basically kill us, but also the just basically not being able to take on board the kind of the confidence and belief, or lack of them, that you have in your overall trading system.
Yeah, I was just thinking when you're saying that, one thing is there's no new ideas, especially with trading. There's no new ideas. It's who practices what's out there the best, and who understands the market and the whole environment of what's going on. The best is the one that actually wins at the end of the day. Yep. Because everybody's mined the hell out of everything, that's any anomaly in the market. I think also for a lot of traders it becomes a grail search, this whole backtesting totally. It can become busy work, they can, because, and what it all ends up being with that, because the grail search is really just a search for security in something that you cannot you can't have that security or that much security in, because trading is an insecure profession insofar as you are literally gambling. So I think a lot of it is that they do an awful lot of, particularly newer traders will do a lot of grail searching for to try and find that special little setup that's going to make them whatever amount of money. And the thing is, which I find sometimes, is they bypass a lot of the classic stuff, flags and just straight support and resistance, and they're all looking for something new. They think that there's something new that's out there that they're going to discover that's going to give them that big edge, and there really isn't, because there's teams of PhDs and mathematicians and all sorts of people, and trying to do exactly the same thing. So what's the chances that you're going to find it? You're going to find this anomaly, and how long is it going to last? Either as well, because you see a lot of people. Yeah, you see an awful lot of people, because that's one of the reasons why backtesting is still a live topic for somebody like me with professional trading, is because the markets do change. They change all the time. I had to do, and you have to do subtle changes. I do some subtle changes in how I draw up my charts now, and then last year I had to do one sort of what I would call a major change in how I anchor my charts, because the market had just simply moved from one thing to another. Setup works.
There are a lot of trading tactics which are time sensitive, in the sense that there is a there is a window within which they operate and work. I talked at the start of this session about how, for example, gaps in FX markets at the start of the week used to be a beautiful thing, a really, really simple way to trade. But really, that hasn't shown up for 10 years, really. There was a year, 18 months of where they were absolutely beautiful, and it was just a fantastic trading method. And not really. Now, you get the odd one here and there, but it's not worth, it's not worth the time sort of sitting around, waiting for that, one or two opportunities a year. And so it is those markets that they do change. And in many ways, I think actually, as private traders, one of our edges can be the ability to sense when that market is changing and be able to adapt to those markets changes, which actually means you might actually have a, let's call it like a basket of 12 different setups. All right, you might actually only use two of them. All right, generally, you might have your two favorite ones, but you also understand other ones to be able to adapt to changes in those markets. And how quickly can you sense and understand those changes in those markets? And the reality is, you don't really get that from back testing, right? In terms of recognizing the change in the underlying market dynamics. Okay, you might get an understanding of whether the actual setup starts to fail, all right, but that is your only indication. You're not getting a big picture view of, let's say, the change in the overall macro.
What you end up finding as well with an awful lot of traders is that they trade more or less. You're saying you might have 3 or 4 setups. Like I could say, I just trade one setup really. I trade the same thing all day long, in the same way all day long. And I think my edge really comes out of, I've been in the market now so long, I kind of know what comes next generally. And I just have to sit there and wait to see confirmation, which is basically an entry signal. So I draw up my support and resistance and fibs all the same way. I have an idea as which one I have an idea to, so I filter them out, and then it's speed. Speed is a huge big thing, and aggression is a huge big thing, because I think a lot of my ability to either win or lose in the market is the fact that I just sit there and take the trade. Because you'd be surprised how many people, again, if you have any kind of fear slows you down. Fear makes you, because it's doubt. And then if you're feeling afraid in front of something that's moving, particularly in day trading, if you're sitting in something that's are scalping, even more to the point, and you're slow, because you're a little bit afraid, that's your edge gone. That's 50, or at least 50% of your edge gone. You can't outskill it. You can't outskill fear. At the end of the day, there's no way that the best trader in the world, the trader with the best system in the world, they can't operate it if they're afraid. It's you could be driving the best tank in the world across a field in the Ukraine. You've about the same amount of you're going to be afraid. You're not going to be able to outskill anything there, really. So I think it's it does that. Also, as well, I think as well, sometimes when you're back testing, it doesn't take into account your relationship with money. Which was just a kind of a weird thing when I was thinking about it, because we all have different relationships. Money, you have a different relationship with money for everything that you do in your life. Like, so some things you think are expensive and some things you think are cheap. Like I was just telling you there before, like I went out and I bought a six bottle case of wine yesterday, which was on sale. And I was like, that's so cheap, but it was still really expensive if you put it in wine terms. Like, so it's so that's my relationship with money for that. And and you can see it with traders as well. You see some traders, they'll go into a trade and they could risk €2,000, but they come out the other side of it and they wouldn't spend 50 quid in a haircut. Because they'd have to go someplace else where it's cheaper. Like it's all related, and it doesn't take into backtesting doesn't take into account with money. And the other thing I wanted to say, because I had it written down myself, was that's a lot of the stuff that I see coming through for backtesting, from people I've mentored in the past, is just too complicated. Because how are you supposed to backtest if you have 5 oscillators on your screen? what is that? What exactly is supposed to happen at the end? Like, you have the 5 oscillators. What if one of them says no? How do you even keep track of that? How do you backtest that efficiently? It's just too complicated, and it's a surprising amount of people trade, and especially day trading as well. I mean, if maybe if there's swing trading where you might have 3 days to make up your mind as it gets close to your area, but in day trading, day trading is horrendously simple. It is really just doing it, and doing it without fear a lot of the time.
Yeah,
I think.
it is. Day trading is like one of Mike Tyson's fights from the 80s, not from the 2020s and stuff. As in, it is it's that old boxer. It's all that old boxing joke of how do you become a great boxer? Well, you become good at the 1-3, 1-3, 1-3, and the other boxer says, well, what happens to number two? Or number two is what you get. And it is true. Do you know what I mean? You get in there, everybody can get in there, just swing punches and not take any hits in a boxing ring. If you went in there, you'd be thought of naive and stupid. If you went into trading thinking that, you're just always going to win and never take any losses, once again, you'd be thought of as naive and stupid. Mm. It is actually, how well do you take the hits? Can you manage that? Can you manage that downside? Are you on top of it? Can you use it to steer you rather than sink you, as it doesn't trigger into death spirals of revenge trading and stuff and what have you. And you're not going to get that from back testing, which kind of leads into trying to be a bit positive and stuff. It is about back testing. I strongly believe should lead to forward testing. All right, you can back test all you want, but as long as once you've got an idea that this idea might have some genuine value, you have to get into a forward testing, okay? And that, I tell people, is basically just we've got to trade it live in the market, a minimum of 100 trades. It can be small size, okay? And that is a huge bonus that traders have these days that I didn't have at the start. When I started, there was no mini lots, there was no micro lots. You were in a full standard lot, basically $10 a point for one contract, bang, in you go. These days, you can take 100 trades, and each trade might cost you the same as a cup of coffee, if that. You have an opportunity to really test your ideas really, really cheaply. And yeah, it's weird that I find lots of people don't want to do that forward testing. They don't want to. They don't want to do it. They don't want to. They basically need to have a system that makes money at full size from day one of their operating. And the reality is that's you've boxed yourself in there. You're setting yourself up for failure there, aren't you?
Yeah, you are. Well, I mean, you have to do the work, and you have to pay the money to get what you want to get out of the end. And I was just thinking as well, with people with losses, losses buy you information. If you're trading properly, a loss buys you information, because you're going to get a loss. You're only going to get a loss. There's only 2 reasons you can get a loss. One is that, 3 reasons. You're in too early. Your stop wasn't big enough, which is actually really just one of them. Or the market just continued past your wherever, so you just got stopped out. So now, what do you know after that? You know that the market's going further up.
Yeah.
So that's something. Now you can buy the pullback. Mm-hmm. So I bought that piece of information, and that's something I do every day. So I go into we say the top of a range. Price goes to the top of the range, and I have to take them setups, and that is the tops and bottom, all at the tops and all at the bottoms of the ranges. And then so at the top of a range, it goes up through the top of the area, which was going to inevitably stop me out and cost me a little bit of money. But I'm straight away into the next setup, which is the pullback. So you normally get a pullback straight away after a decent break, and then I'm able to carry on. I'm into the next thing. I have bought that information. I haven't really lost anything. I just when I get a loss, and it sounds very cliche because it's in a lot of the things, it's kind of almost a celebratory thing, because if the loss is kept, if I have acted in the right way, if I have stuck to my plan, then I'm okay, because over time I know I'm going to make money. Over time I know I'm going to do to be happy enough with it, like, because it's a celebration of your own skill level, because you got out of something in the right place. You didn't screw it all up. And generally, I know my loss before I go into the trade, so I would know. I would have a good idea about how much money I could possibly lose on any trade. Like, so it's an amount of money that I'm happy to lose. You know, I can survive that loss. I can survive multiple of those losses without you know, having to feel emotionally stressed over it. If I've acted, the only time you really get a load of stress, I think, in day trading is when you don't do the right thing. Because if you're always doing the right thing, you will win in the end. But if you're doing the wrong thing, if you go in and you're like yesterday, I just buggered everything up yesterday, and then it was stressful because I did not operate in the right way. Where if I go into other days, I go into the market and, you know, there's just nothing there. There's no way to win. I mean, there isn't the movement. You have a little 10-point spread, little 10-point range in it, and it's just, you know, there isn't the room for it to give you a signal and to give you a decent profit, and that's going to soak up the next. That's going to keep you safe and allow you to go to break even, which is really the only thing that you can do. So I think it's losses are quite a thing to celebrate. And I found when I was doing not sim trading, backtesting, backtesting really gave you a good idea of what you should expect to see in terms of losses, and that's more important than what it does in terms of pay.
Yeah. In many ways, give you a bit of insight into what the streaks of wins and losses are like. What's the random distribution of wins and losses in for that system? That in itself can help you, and obviously it's one of those things, as I said, that can either help your confidence or shred your confidence. And you're right, it was Mark Douglas, I think it's Mark Douglas, you said that, you know, you just treat losses like, you know, you've just paid for some information from the market. It's up to you how you basically interpret and use that information. You know, new traders will take that loss, they'll take it personally, they'll think, you know, they're a terrible trader, they're a woeful trader. They're not. The market is just a huge, big, dynamic, fluid environment that we operate in and work in, and you know, it's just part of the nature of the gig. You know, as I said, just look at it as you paid for some information. How am I going to use that to get the most out of it, to basically turn the situation around? I suppose, you know, as we kind of look to draw to a close, is one of the points is that I try and get across to people is that back testing is valuable and it is beneficial. But even if you've tested, let's say, a setup, all right, and it has failed, that doesn't necessarily mean that it was a waste of time and energy. Because I myself have found when I've done that, quite often, sometimes it will trigger a new idea or a new thought, or you look to do one thing, and actually the testing tells you, you know what, you should be doing the exact opposite, which can be fascinating. Also, what I found is that you know, maybe I have a whole system I want to test, and actually the system fails, but actually one or two parts of it are actually they are solid, they are usable, and I can take that and then meld that into a new method, okay, with all the bits that I've tested. So, you know, it's almost like it can be like a phoenix from the flames, right? That rising out of what might seem like the ashes of your failed back testing is not at all. There will be gold nuggets in there that you need to find that will help you evolve to your next level as a trader.
Yeah, I was just thinking one of the things with the newer traders often think that it's cleaner. The trading itself, the process of trading is cleaner than it actually is. You know, it's a mess a lot of the time when you're day trading. A lot of the time it's just about keeping going. You know, you have your setup and you just keep rolling that setup on. And you know, that's one of the false ideas I always think that comes out of back testing, is that you're going to find this thing and you're going to have this surety, this security that you're going to press the button 10 times and 7 of those times it will work. And 3 of those times it will not work. And that is not something you're going to find, because it also with the distribution of them, because sometimes if you have three trades that don't work, it does in 10, and it was just simply that you could do your 7 trades that work, 3 trades don't work, and the 3 trades of the next batch of 10 don't work. Now you have 6 in a row. So it can be a bit a bit messy. I think it's only backtesting is only a waste of time if you're doing busy work, and that's something that you don't want to get stuck into doing. And I was also thinking as well, because some people, when it's like classic patterns, like, because I was thinking about the head and shoulders there for a sec. So daily head and shoulders, a lot of those classic patterns that you go and you read your Volkovsky book or you read whatever, and they have at that time, they have the outcome of those charts, how much, sorry, of those patterns, how often they succeed and how often they don't succeed. And they're all that, a lot of those things are gone.
Agreed.
But what has happened is that's been replaced by something else. So if you look at a head and shoulders, for instance, on a daily time frame, that's one. First of all, there's different head and shoulders. There's 60-minute head and shoulders, and there's daily head and shoulders. Daily head and shoulders fail, I think, 70% of the time. They don't go to their technical target 70% of the time. And people are going, oh, it doesn't work anymore. Oh, head and shoulders, terrible, don't work anymore. But now you have 70% surety that the price is not going to some place.
Yep.
That's something you can actually use. Now you have a statistical thing that says it's not going to go to that place. And then a lot of the stuff that doesn't work anymore on daily charts still works on intraday charts, like head and shoulders on a daily, on a 60-minute chart is not the worst thing in the world. It's actually a pattern. It's not something I would trade just on its own, but it is something that I would observe and be aware of, that I'm looking at a 60-minute head and shoulders, and they can be really quite dirty. That the one side's higher and lower and whatever else. But they're still there, and they're still common, and they still work on that thing. And that's because there's less people in the market. Less people are. You have less money moving the intraday market than you would overall in the larger market. You have a different type of trader in there, and the stakes. It's most of the money in most things is made on the daily chart. It's made on that time frame, where it's not made, where day traders can make quite a lot of money, but it's not really as important to the overall outcome, I don't think. Because a lot of the time what you're doing as a day trader is you're just joining the big boys, so they're deciding that they're going to buy something, Apple computers on a Tuesday morning or something, and your setup triggers and says that's now a buy, and all you're doing is joining in. You're not creating anything. They're not going to. They're happy to have you in there because you're just adding fuel to their move at the end of the day. Yeah, and that's which is a whole other concept of people want you actually in the trade. They're not actually there really trying to get you out all the time. It's all rigged. Yes, it's all rigged. That's why technical
You're struggling there, Ian.
Works. Sorry?
Yeah. You're struggling there. Are you all right?
Oh, I'm still a bit fluey, to be quite honest with you, but yeah, and then just some words like technical analysis. it's the first 4 letters of it just throws me off every single time. So
yeah, there you go. You need to get out more.
I really could do with getting out more, to be quite honest with you. I mean, I was in Tesco's yesterday. That was an exciting.
There you go, living the dream there, Ian. Living the dream.
I have to go up and pick up a bunch of kids later on and bring them home.
I'm telling you, you're like a modern day Uncle Buck.
Yes, as I said, I mean, the most exciting thing that happened yesterday is I made poulet Normandy, which was actually really nice. And if you ever look it up, it's not that terrible of a recipe to make, and you get a half a bottle of cider to drink, and you get a bottle of cognac that you can sip away on while you're cooking.
There you go.
So it's quite
good. Any recipe that has Normandy in the name is going to be involving some sort of apple-based alcohol, isn't it? Really, that's under my very superficial understanding and admittedly enjoyment. That anything from that part of France and stuff is not cider or Calvados or Cognac or whatever it is and stuff. Not that I'm complaining, but. But there you go. But anyway, before we digress off into your culinary skill sets, and maybe that's a podcast all of its own and stuff.
But
Yeah, let's draw it to a close by sort of re-emphasizing just a couple of the main points. Namely, backtesting is a necessary evil. All right, it is not the panacea. It is not going to turn you into an overnight superstar as a trader, but it is a necessary evil. You should be doing it. Okay, whether you're doing it manually or whether you're doing it, using a testing system or algo or etc. You're coding it up. It does need to be done because it's either going to give you confidence in the method or it's not, right? You have to recognize most of these ideas will probably fail, but that's okay. All right, that's okay. There might be a kernel in there that basically is the spark or the catalyst for your next idea, your next method. Okay, and you need to get it done, get out of the way, and then you need to think about forward testing it. And there is no escaping that. You can do it live, you can do it cheap, and all of that just helps build confidence and belief, right? Simply because something that might look great when you're back testing, might completely fall apart when you sort of employ it in a live market, either through your ability to follow the plan, or the plan is just flawed because it actually doesn't take into account the mechanics of live trading in terms of spreads and fills, etc., and the like. So you have to back test it, then you have to forward test it, and that will give you confidence and belief. Anything I've missed there, Ian?
No, but I'd say if anybody's gone out to test an idea, start with the classic stuff that you've read about in technical analysis, like flags and head and shoulders
Yeah.
and double tops, double bottoms. Start there because that's the stuff you're going to end up using. You're not going to find some magic pill that you're going to take, which might be a tough pill to swallow, but it's not a suppository. So just start with the classic stuff. Start there, work from there. You have more of a chance of getting someplace with a double bottom than you do with anything else because there's only three of them. There's only three different types of double bottom. So
there you go. So there you go, ladies and gentlemen. Take on board Ian talking about double bottoms and suppositories and stuff. You never thought we'd get that into a talk about trading, but clearly you've never been in the pub with me and Ian. You'd be surprised at the places the conversation can go all the way from the back of talking about a break of a trend line. But there you go. Listen, anyway, thanks everybody for listening. As always, we just implore you just to subscribe and listen to us. And if you've got any comments or questions, just ping it across to us. Next week will be TOGS 34. We're into December, and we're going to talk about really, it's coming towards the end of the year. Is it actually worth trading during December? All right, and it's a narrow title, but actually, as always, it will open out into conversations about how you run in towards the end of the year and what you should be doing to sort of finish the year on a high. So hope you'll join us for that. As always, thanks very much for joining us, Ian, and undoubtedly we'll speak to you all soon, everybody. Thanks very much. Cheers.